Taiwo Idele, who's the chairman of Nigeria's Presidential Committee on Fiscal Policy and Tax Reforms, has disclosed a simplified and business-friendly withholding tax regime, which he says has been approved and is expected to be published in the official Gazette in the coming days. There's a tweet, which also includes a background on when withholding tax was introduced in Nigeria back in 1977. Let's take a look at some highlights that he put up there from a Twitter thread where he went in depth on explaining what's to be expected. So we've got an exemption of SMEs from withholding tax. We've got a reduced rates for firms with low margins, exemptions for manufacturers and producers, measures to curb evasion and minimize tax avoidance. We've also got the ease of obtaining credits and utilization of tax deducted at source, changes to reflect emerging issues and adopt global best practices, and clarity on timing of deductions and definition of key terms. So hopefully, taking us through with enough time to explain all of this, we've got Mr. Adeyemi Adediran, who is a partner, commercial practice at Andersen Nigeria. Good morning to you, sir.
Good morning.
Thank you so much for joining. So, what do you make of this, the announcement of this hopefully simplifying the withholding tax regime?
I think it's a very good development, especially for businesses. If you look at the provisions of the regulations, it literally puts more money in the hands of the businesses for them to improve their cash flow and to actually carry on the purpose of which they have established, which is doing business. If you look at the Finance Act between 2019, when it was introduced, and 2023, you won't see any major significant changes in withholding tax regulations or withholding tax practices, as it were. But this 10-page simple document has actually made significant changes that is good generally for businesses.
Fantastic. So it's all about us making things simple and easy. So if we look at the first point there on the list where it talks about exemption of SMEs from withholding tax, is that good, or isn't a revenue impact for government? What do you make of that first point?
Well, there's no revenue implication for the government, as it were. The concept of withholding tax is that it's an advance payment of income tax.
Right.
So what the government is saying is that I know you're going to pay me your taxes at the end of the year, but I can't wait till the end of the year. So pay me as this transaction is ongoing. So I'm going to then give you a credit at the end of the year. So what this introduction is saying is that small businesses with less than 25 million turnover, do not have an obligation to withhold tax. It doesn't mean that the provider of the service won't pay its taxes at the end of the year. But this is saying I'm not going to burden small businesses with the obligation of acting as an agent of government by withholding tax and remitting to me.
Okay.
You recall that the Finance Act had exempted small businesses from taxes generally. So this is an additional incentive to help small businesses.
The second point, the reduced rates for firms with low margins. You basically help us. I mean, that's if your margins are low, you don't want to get those tiny margins eaten up by tax.
Exactly. So this has been a challenge for companies, let's say companies in the construction industry, where you have a huge capital outlay and your margins are very thin. Withholding tax before now was generally at the rate of 5% or 10%. Imagine if my margin is about 2% and I have to pay 5%, 10% to governments ahead of time before the end of the year. So what this is saying that I'm going to help you and free up more cash, reduce the withholding tax from 5% or 10% as applicable to 2% for construction companies, for telecommunication companies. That way, the margins can absorb the credits and they will have enough withholding tax credits to pay at the end of the year, and it will impact that business as it is doing now.
Okay, so the exemptions for manufacturers and producers, are we tying that to the point number one, which is exemption for SMEs on the withholding tax? Is that, or to help us out? See, this is why we brought you on the show.
Yeah.
So you can clear all this up. All right, so yeah.
That's totally different.
Okay.
Before now, the FIRs had issued circulars in the past, technically exempting manufacturers from the sales of goods by manufacturers from withholding tax deduction. Meaning that if I'm a manufacturer and I sell goods to you, when you are paying me, typically you should withhold tax. But what this is saying that you shouldn't withhold tax. Now, the circulars issued by the FIRs in the past have kind of indicated that manufacturers are exempted from withholding tax deduction. That means you are not supposed to withhold tax when making payments to them. But because there are court cases that says circulars issued by the FIRs do not have the force of the law, companies over time, I've had to write to the FRS to give them some private ruling to exempt them from taxes. But what this regulation is saying is that you don't need all of that. We are exempting you from withholding tax deduction. So when you make sales to distributors or to customers, they are not to withhold tax, they will pay you. So you see, this also frees up more cash for manufacturers for them to focus on their business. Yeah.
There's been a lot of talk around point number 4, measures to curb evasion and minimize tax avoidance. Is that a technology discussion? What's your view on that?
So I would say that what this regulation has done, the FRS before now was the major enforcer of withholding tax, even though companies had obligations. What this has done is to take some of those responsibilities from the FRS and put in the hands of companies. So when you and I do business together and you withhold tax from my invoice, you should issue me a receipt. With that receipt, I can get credit notes from the FRS based on this provision. So the simplicity introduced will reduce tax evasion because I'm giving you a receipt. You can get credit note with that rather than waiting for the FRS to issue a credit note for you to use. And because the FRS will still audit you, these regulations are specified, even though it was an existing law before, the penalty and interest should you withhold and you should not remit. So there are three parties here. There is you, there is me, and then there is the FRS. So in that circle, right, it's going to actually limit the possibility of evading remittance because of the penalties and interest introduced. They're going to reduce the possibility of tax evasion because of the three parties have to watch how the tax is flowing. I have to go to the FRS for the credit notes. You have to remit and issue me a receipt. Yeah.
Fantastic. Thank you for illustrating. All right, point 5, and this is another big one, the ease of obtaining credits and utilization of tax deducted at source. So talk us through that.
I'll say this is the major provision of this regulation.
Okay.
Because what has happened in the past is that when I carry out a transaction with you, for instance, and you withhold tax, and the rationale is that I'm going to get withholding tax credit notes from the FRS, which I will use to offset my taxes at the end of the year. But the current challenge is that the FRS doesn't readily issue those withholding tax credit notes for me to use at the end of the year. So I've paid an advance tax when you remit to the FRS, but the credit note is not available for me to reduce my tax at the end of the year. So it's like double jeopardy for me.
Right.
So what this has done is to say that when you withhold tax from me, even when you have not remitted to the FRS, as long as you issue me a receipt, I can get credit notes from the FRS.
Okay.
In principle, that's what this has done. I am sure that the FRS may want to verify the genuine authenticity of that receipt and all that, but those are matters of procedures.
Okay, fantastic. Okay, this sounds kind of general. Point 6, changes to reflect emerging issues and adopt global best practice. I guess just to put us on par with also other regions, right?
So you see, the canon, when you look at the canon of taxation, one of the canons is simplicity and certainty. This is a 10-page document. It's simple to read, and it provides some ease to companies to get their credit notes. In the past, the FRS will have to carry out a withholding tax verification exercise. Let's know whether this credit. No, but this is saying that when a company issues you receipts, it's enough for you to get the credit note, whether the company has remitted or not. So the simplicity has been introduced, Then certainty. Before, I'm not certain that when you withhold my tax, I will still get the credit note. But that certainty has been resolved because now, even when you don't remit, as long as you issue me a receipt, the FRS, upon confirmation of the authenticity, I believe, will be able to issue me a withholding tax credit note. Even though the law did not even say they need to confirm, it just says that as long as I'm able to show the FRS a receipt, they should give me the credit note, which I can use at the end of the year, rather than waiting for an elongated verification exercise from the FRS.
Well, we almost made it to the end, to point 7. Well, we've run out of time. But look, I thank you so much for coming on the show to explain this. We've got to have you back because there's so much to talk about with taxes. Adeyemi Adediran, partner, commercial practice, Andersen Nigeria. Thank you so much for your time.
Thank you.